Hi everyone, welcome to the webinar workshop series conducted by TCS in lieu of the upcoming OCS exams happening in August 2025. My name is Nick and I'm the lead tutor and evaluator for OCS at TCS. So let's look at the session plan. First things first, I will be sharing general feedback with you because some of you have already completed up until mock number 4, which is great. So you have simply 2 more mocks remaining. So it appears that you are sticking to the study plan. So I've gone through your answer scripts concerning mock number 4, and I've encountered some problems, but I have to be honest with you. There's a significant improvement in the way in which you are approaching your examinations, which is extremely good because compared to what I encountered when going through your answers concerning mock number 3, there's a significant improvement, which shows the fact that you have taken steps to stick to the answering technique, which we highlighted in the third webinar. And at the same time, it appears that you are revising by redeveloping answer plans, which is great. And then in the second part of today's workshop, I will be taking you through your F1 syllabus. After doing so, I will explain the logic behind an answer tied to working capital management, an important element of your F1 syllabus. And as usual, I will be conducting a Q&A session at the very end of today's workshop. So before we get into the technicalities, let me quickly remind you of the upcoming workshops we've scheduled for you. So the P1 and E1 workshops are, the E1 workshop rather is happening on Sunday at 9 a.m. or 9 GMT or 10 a.m. UK time. So similar to what I'm going to cover in today's workshop, I will be taking you through your E1 syllabus and also taking you through one of the questions concerning your E1 syllabus. And in the final workshop, which happens 2 or 3 days before your examination, I will be sharing last-minute tips with you to make sure that you walk into the exam with a high level of positivity, because if you believe in yourself, if you're confident about the skill set which you have fine-tuned across the last couple of weeks, then definitely you can easily pass this examination. All right, so first things first, let's direct our attention towards feedback concerning mock number 4. As I mentioned earlier, there's a significant improvement, yet in certain subtasks, I identify the fact that some of you have either misunderstood the requirement, or you have stuck to the requirement in the first part of your answer, but in the second part of your answer you have deflected from the requirement. So as I mentioned in the third webinar as well as last week's workshop, it's essential that you reiterate each requirement in your own words in a concise manner before you start to develop the answer plan. So before developing the answer plan, always remember you must simplify the requirement. Why am I asking you to simplify the requirement? To achieve 2 main things. Number 1 is to make sure that you gain an in-depth understanding, a clear understanding of the requirement. And at the same time, whilst developing the answer plan, when you have a simplified requirement at your disposal, it makes your life easy, because you can always cross-reference with simplified requirement and see whether you are developing an answer which is aligned with the requirement or not. So in order to make sure that you gain a clear understanding of the requirement, and also to make sure that your answer is 100% aligned with the requirement, always remember to simplify the requirement in your own words in a concise manner. So when I'm taking you through today's workshop, or today's mock exam rather, I will explain how to do this. So if you missed out on last week's workshop, or if you missed out on the third webinar, there's absolutely nothing for you to worry, because I will be explaining these things again in today's workshop. And another shortcoming which I encountered was with regards to lack of theory knowledge and issues tied to application. So if you don't know theory, you won't score any marks for application. For instance, when looking at mock number 4, if I'm not mistaken, there was a question to do with variance analysis, labor variances, if I'm not mistaken. So most of you had struggled with this question tied to labor variances, probably because of the fact that you are not too comfortable with variance analysis related questions. So even if you are coming through the OTQ route, yes, you have, learned what these variances are. You have learned how to calculate these variances. But at this examination, it is not about calculation. It is all about evaluating these variances and highlighting any linkages between these variances. So it's essential that you gain a good understanding of all theoretical elements covered within your E1, F1, and P1 syllabi, especially concerning your P1 and F1 syllabi, because your paper is P1 and F1 heavy. If you attended last week's P1 workshop, you know what I'm talking about, because there's a lot of concepts which is covered in your P1 syllabus, which is definitely tested at your OCS examination. So if you have knowledge gaps, you have to take steps to go through the answer plans to figure out how theoretical elements should be included when developing your answers. So the best way to learn theoretical elements is to go through the answer plans which we have shared with you. And after you had gone through these answer plans, you are supposed to redevelop answer plans, thereby trying to figure out whether you are capable of replicating TCS's answer plans. Because if you are capable of achieving this, if after redeveloping answer plans over and over, if you gain the ability to replicate TCS's answer plans, then you won't struggle at your real examination. So that's the first thing which I wanted to highlight. It appears that there are gaps in theory knowledge. This will be true, especially if you are coming through an exemption route. And on top of that, I spotted some issues with application as well, especially concerning KPI related questions, because in KPI questions, you have to come up with a practical answer, practical recommendation based on the information presented in each unseen. So when doing so, it's not too easy, because you need to have the ability to spot the issues as per highlighted within each unseen. And in order to fix each of these issues, you need to come up with key performance, or you need to recommend rather key performance indicators or KPIs. So it's not too easy to do this. So you can, although this is the case, you can fix these problems when you are conducting revision, when you go through our answer plans, and when you take steps to redevelop answer plans. Then you will easily gain an understanding of how to tackle questions to do with KPIs. And in some answers, I saw that you have simply reiterated theoretical elements rather than utilizing the unseens info when conducting your evaluations, which should be avoided. Again, this mistake can be avoided when you go through our answer plans and when you take steps to redevelop answer plans. And some of you, I spotted the fact that especially towards sections 3 and 4, you have run out of time. So this is quite normal, because as I mentioned in the fourth webinar, in sections 3 and 4, fatigue sets in. When this is the case, you will be experiencing extreme levels of stress. Stress leads to panic. When you panic, then you'd get emotional, and then you'd experience something called brain freeze. So when you are experiencing brain freeze, you will end up wasting something like 10 to 15 minutes of your time when you're in the last two sections. So it's quite normal for you to experience these things, because you are operating in a time pressured environment. But I taught you how to overcome these type of stressful situations in webinar number 4, and I hope you'd keep practicing these techniques when attempting the remaining 2 mock exams as well. And if you're yet to start preparations, when attempting all 6 mock exams, always make sure to keep practicing stress management techniques on top of answering and time management techniques. So don't worry, keep practicing these techniques, because if you do so, by the time you are done with all 6 mock exams, you will have the capability of developing answer plans without running out of time. And at the same time, you will have the skill set to avoid unnecessary stressful situations. And at the same time, when you are faced with a stressful situation, you'd know how to come out of such a situation. So these are the things which I encountered. These are the shortcomings. These are not major shortcomings, to be honest with you, because I'm really satisfied about your performance. There's a significant improvement in your skill set between mocks 3 and 4. Okay, so having said that, let's go through the F1 syllabus to figure out what type of syllabus areas can be tested at your examination. So yes, so everything tied to financial reporting will be tested at your exam. So your knowledge pertaining to IAS 2 inventories will be tested, IAS 7 cash flow statement, IAS 10 events after reporting period, as well as IAS 16 property, plant and equipment, which is the most prominent IAS, which will be tested at your exam, because IAS 16 will be tested in multiple angles. So you need to understand how to capitalize expenses, how to depreciate property, plant and equipment, if we are disposing PPE, how we should account for it and how it impacts our financial statements, how to conduct revaluations, because when we are trying to dispose our assets, for instance, we have to revalue them. So when we are dealing with revaluations, you need to know how to deal with them and how it impacts our financial statements. And you should also know how to change the useful economic life, or the UAL, of the assets which are in use. So IAS 16 property, plant and equipment is heavily tested concerning all these elements which I've highlighted within this document. Also, your knowledge pertaining to IFRS 5, non-current assets held for sale and discontinued operations can be tested as well. Because when we, for instance, let's assume we want to purchase some new assets. When trying to do so, in order to raise money partially, companies usually try to get rid of their existing assets which have been utilized for a certain time period. So when they are getting rid of these assets, or when they are disposing these assets, some might remain unsold at the end of the financial year. So we need to account for these type of unsold assets which we intend to sell but remain unsold within our financial statements. So we have to reclassify them as current assets as per IFRS 5. So IFRS 5 will be tested in conjugation with disposals, IAS 16 PPE. Under that, there's disposals. And so disposals as well as IFRS 5 can be tested in conjugation. And on top of that, IFRS 16 leases can also be tested, because our company has the option of either going purchasing an asset outright, or opting for a lease agreement. So IFRS 16 leases will definitely be tested at your examination. Along with it, taxation will be tested. So you have to be conversant with general taxation principles and capital gains taxes, how to compute capital gains taxes. It will be tested at your exam, as well as international taxation, because if we go for some type of an international expansion, then you need to understand how to account for them, and how these transactions will impact our tax bill. So your knowledge pertaining to international taxation, which falls within your E1 syllabus as well, will be tested at your examination. And finally, your knowledge pertaining to working capital management will be tested. So everything to do with working capital ratios will be tested at the examination. So you need to know, the numbers will be shared with you. So you should have the capability of evaluating the financial standing, or the short-term financial position of your company or some other company which we are dealing with at the moment. So you will understand how your knowledge will be tested after I take you through today's mock exam, which is based on working capital ratios. So you have to be conversant with receivable days, inventory days, as well as payable days, how to evaluate based on the numbers provided to you. And in an overall sense, you must have the capability to comment about the cash conversion cycle as well. And your knowledge pertaining to short-term investment options will be tested. So if we have some additional cash flows or surpluses in the short term, how we could invest them in the short term. And at the same time, short-term financing options. So if we are running out of cash, if we are encountering cash deficits, we can fix them by opting for short-term funding initiatives. So short-term financing options as well as short-term investment options will be tested at your examination. So don't worry, we have covered all these elements within the 6 mock exams which we have developed. Then you'd understand how to tackle each F1 related syllabus area. So compared to P1, F1 is relatively easy. Why am I saying it? Because it's simply a matter of reiterating what appears within each financial statement. So we have developed the answer plans and shared them with you. So when you go through these answer plans, you will understand the exact points which you need to include when a certain IAS or IFRS is tested. And if you include the same type of points, you will get full marks. So when it comes to your F1 syllabus, it's all about memorizing the points which appear within our answer plan. So your life becomes easy because, when there's something to memorize, you can easily do so when compared to something like a P1 related question, because you need to know how to structure the answer. And at the same time, there's some practical thinking involved as well. So there's some, decision-making element to P1 related questions, because you have to use your brain, you have to, think and, come up with your evaluations. But in here, when it comes to your F1 syllabus, especially concerning the IASs and IFRSs, there's no thinking involved. Instead, it's simply a matter of replicating the exact points which appear within the answer plans which we have shared with you. I can't say the same thing with regards to taxation and working capital management, because in these elements, there's some type of thinking or logic involved. But when it comes to IASs and IFRSs, your life is quite easy because it's simply a matter of memorizing what appears within our answer plans. Okay, so that's your syllabus. So since working capital management is heavily tested and it takes a lot of weight, it carries a lot of weight rather, I'm going to conduct my evaluation based on a working capital related question which appears within our first mock exam. All right, so before we get into these nitty-gritties concerning mock number 1, which is focused on working capital management, let me quickly tell you what we offer at TCS. So I'm on the OCS page. If you are yet to create your free user account, click on this button, then you'd gain access to our student dashboard. And under my courses, in front of OCS free, you'd see an access content button. Click on it. Once you have clicked on it, you'd gain access to the recorded versions of the weekly webinars and workshops which we conduct. Under the study material tab, you'd gain access to the pre-seen mind map, the syllabus coverage document, and the answer plan of mock exam 1. Then under the mocks tab, you'd gain access to the questions and the suggested answers of mock exam 1. And in the exams tab, you'd gain access to via the exams tab, you'd gain access to our exam platform on which you can attempt mock exam 1 in its entirety under exam conditions, which is the best way to test your answering time management and stress management techniques. So as you know, we have developed the exact replica of the Pearson VOE system on which you'd attempt your real examination. So, you have the opportunity of attempting mock number 1 under exam conditions via TCS's exam platform. So make use of these resources on offer. And if you're interested in investing on our paid content, click on this button and check our sample material before you do so. And if you're yet to join our OCS WhatsApp group, click on this button and join it. Via this group, we'll keep you guys informed about the workshop commencement dates and times. And at the same time, if you have any questions, you can get them addressed instantaneously, because I'm always there to help you. And I will be sharing free study resources via the OCS WhatsApp group as well. So if you're yet to join it, please click on this button and join the WhatsApp group. And talking about what we offer 2 main packages, the essential course and the value course. And we are actually selling the value course at a discount, since the exam is just 2 weeks away. If you're still contemplating about investing on exam standard and pre-seen specific study content, go for the value course we have, because we have offered a £150 discount on both the installment and full payment option. So I'm going to talk about it in a little while. So talking about the essential course is developed, focused on those who have completed their OTQ examinations. So since you have completed your E1, F1 and P1 OTQs, you have already learned all syllabus areas or theoretical concepts. It's simply a matter of improving your application skills when conducting your preparations. So under the essential course, you would gain access to the recordings of all webinars and workshops, 3 mock exams with suggested answers, because as I mentioned earlier, if you're coming through the OTQ route, it's simply a matter of improving your application skills, and you can achieve just that by attempting simply 3 mock exams. And you'd also gain access to pre-seen analysis videos. Once you have watched these videos, you will gain an in-depth understanding of what appears within your pre-seen document. You will also gain access to the annotated pre-seen industry analysis and financial analysis slides. Let me quickly show you what these documents look like. So in the annotated pre-seen, we have developed annotations with the intention of summarizing key pre-seen info. And at the same time, we have also indicated probable exam scenarios which can be tested, which is aligned with the info presented in each page of your annotated pre-seen. Also, aligned to these probable exam scenarios, we have indicated the syllabus areas which can be tested, and we have made sure to cover all these elements when developing our 6 mock exams. And talking about the financial analysis slides, so you would have seen the financial statements of your chosen company towards the very end of your pre-seen. So we have evaluated each financial statement in depth, yet making sure to keep things simple so that you can easily get an understanding of the financial standing of your chosen company. So we have evaluated the SOPL, the SOFP, as well as the statement of cash flows. And we have also conducted a ratio analysis. Again, we have evaluated each ratio in depth to make sure that you gain a good understanding of the financial situation of your chosen company. Similarly, looking at the industry analysis slides, we are not expecting you to conduct an industry analysis. Instead, we have done it for you. So these set of slides are divided into 4 main parts. In the first part, we have defined your industry. And in the second and third parts, we have explained about the competitive landscape as well as highlighted industry trends. Based on these industry trends, scenarios will be thrown at you at your real examination. And at the very end, concerning 2 real-life companies, we have explained how real-life companies operate within your chosen industry. So these are the type of resources on offer under the essential course. And also you'd gain access to the top 10 likely issue slides, which indicate the most probable syllabus areas which can be tested at the exam. You will gain access to a case study familiarization kit. Once you have read through this kit, within 10 to 15 minutes, you are in a position to gain an in-depth understanding about the technicalities of your OCS examination, and you'd also gain access to a tutor-managed live chat. So the essential course is priced at £199. And talking about the value course is intended for those who had failed the OCS exam previously and those who are coming through the exemption route such as FLP. So both these sets of students have the same problem. There are gaps in theory knowledge and issues with application. So with the intention of bridging these gaps, we have included some additional resources under the value course on top of what appears under the essential course. So under the value course, you would gain access to the OTQ revision cards. So after attempting a certain mock exam, if you feel that you were struggling with the syllabus area or the syllabus areas highlighted within a certain mock exam, simply refer to our OTQ revision cards to brush up your knowledge in a jiffy. You would also gain access to the online mock exam platform on which you can attempt all 6 mock exams under exam conditions, which is the best way to fine-tune your answering, time management, and stress management techniques. Also, you will gain access to answer plans of all 6 mock exams in a little while. You will see what an answer plan looks like, and you will understand the benefit of gaining access to these answer plans, because when conducting revision, your life becomes extremely easy, because when you are going through these answer plans, you will easily understand the logic behind each answer, how each answer should be structured. You will easily understand how to bring in theoretical or conceptual knowledge when developing answers. And this is the best way to significantly improve your application skills as well. So the value course is priced at £349. So as I mentioned earlier, we are offering a £150 discount on the value course. And if you opt for an installment option, you can pay this amount in 2 installments of just £174 each. Or if you opt to pay in full, you can save £100. If so, the price is just £249. So make use of this discount on offer, because the value course is extremely cheap now. Used to be £499, but it's £249 if you opt for a full payment. So make use of this offer, because you still have time. You have 2 weeks at your disposal. If you commit yourself, you can complete all 6 mock exams, go through the answer plans, as well as redevelop answer plans if you commit yourself. So invest on your preferred course by clicking on either of these buttons. And let me quickly take you to the OCS study plan. Most of you are sticking to our original 8-week study plan, which is great. So according to the study plan, we are in week number 6, and within this week, you are supposed to focus your attention towards mock number 5. So attempt mock number 5 under exam conditions via our exam platform. Practice your answering, time management, and stress management techniques. Once you have practiced these things, go through the answer plan which we have developed for mock number 5. Then you will understand how you should have structured your answer. You will understand theoretical or conceptual elements, as well as how to work on application. Once you have gone through these answer plans, redevelop answer plans on your own, which is the best way to revise your knowledge. So simply attempting mocks and going through answer plans won't help. You need to take some steps to improve your skill set, improve your answering technique, and the easiest way is to redevelop answer plans until you are capable of replicating the answer plans which we have developed at TCS. So that's what you are supposed to do within this week. If you are sticking to the original study plan, if not, if you are sticking to our 3-week study plan, which was released last week, within this week, you need to attempt mocks 3 and 4. Okay, and if you are yet to start preparations, you still have time. And if you start preparations within this week, you need to attempt the first 3 mock exams and conduct revision focused on the same 3 mock exams. And in the upcoming week, you need to focus your attention towards completing mocks 4, 5, and 6 and conducting revision, as I mentioned earlier. Okay, so these are the resources on offer. And having said that, let's move on to the discussion of our mock exam concerning your F1 syllabus. So as I mentioned earlier, I'm trying to focus your attention towards a question to do with working capital management. So you receive the following email from the finance manager, and the subject goes as WCM, or working capital management and budgeting. So I'm not going to take you through all subtasks. Instead, I'm simply going to take you through subtask A, which is tied to working capital management. We have been facing some issues with our existing packaging material suppliers. In this backdrop, our head of procurement thinks that it is better to pursue a single sourcing agreement with Moody's, one of the largest packaging material suppliers in Keelan. I believe that an evaluation needs to be carried out to determine the financial performance of Moody's before we commence business dealings with the entity. So we are not too satisfied with the packaging material suppliers, the existing packaging material suppliers with which we are dealing with at the moment. So because of that, our head of procurement has recommended that we should opt for a single sourcing agreement with one of the largest packaging material suppliers within Keelan, and the name of this company is Moody's. So the finance manager is saying before we select this entity, we have to conduct our own evaluation. Hence, I have attached the necessary information. See reference material 4 for your kind perusal. So let's look at what appears within the reference material. So there's information about sales figures achieved by Moody's across the years 2022 up until 2024. And also there's an indication about the industry average concerning what happened within the packaging material industry in the year 2024. So sales figures, if you look at the sales figures, you can see that Moody's sales had actually doubled, almost doubled each year. Used to be 1.2 million, and it had come up to $2.4 million. It had come up to $4.25 million in the year 2024. So sales had rapidly increased across the years. And looking at the cash position, Moody's had a positive cash position in the year 2022. It had significantly decreased in the year 2023. And then it had faced a cash flow issue in the year 2024. That's why they had to rely on an overdraft, because they have run out of cash. So this indicates the fact that in the year 2024, they have not managed their short-term cash flows in the most appropriate manner. And we have to gain an understanding of the reason behind the sudden drop of cash flows from $825,000 to $56,000 between the years 2022 and 2023. Then looking at the operating cycle, the receivable days used to be 35 days, which indicates the fact that the company, when it extends credit facilities to its clients, the company used to recover cash due within 35 days. But in the year 2023, it had increased to 51 days, which indicates the fact that the company Moody's had taken a longer time period to recover cash due, which is not too good for the cash position of any given business, because we are supposed to recover cash due on time. If not, the company will run out of cash. So that's a problem. And in 2024 as well, receivable days had increased yet again, which also again indicates the fact that the company is struggling to recover cash due from its own customers. And looking at the inventory days, it used to be 30 days. So it appears that the company used to hold on to stocks for 30 days before these stocks were converted into cash. And it had been quite similar in the year 2023 as well. But in the year 2024, they have significantly decreased their inventory days, which indicates the fact that they have converted their stocks into cash faster compared to what they usually do, because as per the provided information, they usually convert their stocks into cash within 30 days. But in the year 2024, they have converted their stocks into cash extremely faster compared to the years 2023 and 2022. And looking at the payable days give us an indication of how long Moody's takes to pay its own suppliers. So in the year 2022, they have repaid its own suppliers within 38 days, but this had significantly increased in the year 2023, where they have taken 63 days to repay its suppliers. And again, this has increased by 20 odd days in the year 2024. So in the year 2022, in which they have repaid its suppliers within just 38 days. When you compare between these 2 years, 2022 and 2024, in 2022, they have repaid their suppliers within just 38 days. But now in 2024, they have taken 86 days to repay its suppliers, which indicates the fact that these guys are not paying its suppliers on time. All right. And there's an industry average information concerning an industry average shared with you as well. So you have to compare the cash position, the sales position, as well as the operating cycle of Moody's to gain an understanding of where this company stands in relation to players within the industry with regards to managing their working capital or short-term cash flows. And there's a note as well. Moody's credit terms for both receivable and payable days are 30 days. So Moody's is expected to, as per their own internal control, Moody's is expected to recover cash due from its clients within 30 days and therefore repay its suppliers within 30 days. However, we can see by looking at the receivable and inventory days, we can see that, receivable and payable days rather, we can see that Moody's have never stuck to their own internal control concerning receivable and payable days, because when they are expected to recover cash due within 30 days, they have not achieved it across the years 2022 to 2024. And when they're expected to repay its suppliers within 30 days, they have not achieved it when you look at the payable days as well. So these are the information presented to you. So let's try to understand what your requirement is. You are supposed to explain the working capital position of Moody's based on reference material 4 and highlight the risks, if there are any, associated with selecting Moody's as a supplier. All right, so there are two main elements to this requirement. So let's try to figure out how you should structure your answer. So as I mentioned in webinar number 3, after reading through the unseen or reading through the scenario, your next step is to simplify the requirement before you start developing the answer plan. So don't develop the answer plan straight away. Before you do so, before you develop the answer plan, take steps to simplify the requirement in your own words. So let's try to figure out how we should achieve it. So I've simplified this requirement. So this requirement is quite long. I've simplified it as explain Moody's working capital position. That's the first part of your question. And then you are also supposed to indicate about the risks of selecting Moody's or dealing with Moody's. So as per our procurement head, we are supposed to go for a single sourcing agreement with Moody's, And when opting for a single sourcing agreement, we are totally reliant on Moody's for packaging material. So if we do not conduct an appropriate evaluation and select the wrong player out there, then if Moody's is not in a position to supply to us on time as per our required level of quality, then we are stranded as a company. So in order to avoid these type of situations, we have to select the best entity. So that's why you are supposed to explain Moody's working capital position to see how they are managing its short-term finances. And then you are supposed to highlight the risks of selecting Moody's. So that's how you should simplify the requirement. And as you can see, when you have a simplified requirement at your disposal, you can easily see whether you are developing an answer which is 100% aligned with the requirement whilst developing the answer plan. All right, so that's the first thing. And then looking at how many points you need to include within this answer. The weightage provided for subtask A is 45%. 45%, as you know, each section carries a total mark allocation of 37.5 marks. So 45% of 37.5 marks come up to 17 marks in total. So now you know how many marks are dedicated for this subtask. And your next step is to divide 17 by 3. Then you get an answer which is 5.6 or 5.7. So let's say 6. So if you divide 17 by 3, the answer comes up to 6. Then you are supposed to divide 17 by 2. Then it comes up to 8.5 or 9. So if you include 6 to 9 valid points under this subtask or concerning this subtask, then you will get full marks. So look at the weightage. By looking at the weightage, determine mark allocations. So 45% of 37.5 marks come up to 17 marks in total. Then you are supposed to determine how many points you need to include for this type of a question which carries 17 marks. So divide 17 by 3 and 2. When you divide 17 by 3, you'd get an answer which comes up to 6. When you divide 17 by 2, it comes up to something like 8.5 or 9. So if you come up with 6 to 9 valid points, you will get full marks for this type of a question which carries 17 marks. So that's how you are supposed to determine the number of points you need to include based on the mark allocations or based on the weightages. And then let's try to figure out how we should structure your answer. So let me scroll down to the relevant section. Okay, so we are in section number 4. I've come up with a main heading which goes as working capital position Moody's, which is in bold and underline format. So first things first, let's focus our attention towards inventory days. So when you look at inventory days, first let's look at the industry average. So the industry average is 32, which indicates the fact that packaging material suppliers usually take 32 days to convert their stocks into cash or convert the raw material stocks into cash, thereby being in a position to sell their packaging material to another customer. So if you look at Moody's situation, within the years 2022 and 23, they have adhered to the industry average. So when the players within the industry, within the packaging material industry, has taken 32 days to convert their stocks into cash, Moody's has taken 30 and 31 days, which is quite similar to the industry average. Okay, so that's what I've mentioned in here. Inventory days of Moody's is consistent with the industry until the year 2023, because on average in the years 2022 and 23, they have achieved stuck closer to 30 days. But if you look at the year 2024, there's a significant decrease in inventory days. Inventory days had almost halved in 2024 as opposed to the years 2022 and 23. So in 2024, inventory days have almost halved or come down to 18 days. So we need to figure out why this happened, especially given the fact that packaging material do not become obsolete fast. So we are not dealing with a perishable item. Packaging material, you can keep it for as long as you like, because it's not a perishable item such as a food item. So packaging material does not become obsolete. So when this is the case, why have these guys all of a sudden reduced their inventory days? This might be due to rapid revenue growth, which had led to a lack of cash. So if you look at the revenue figures, revenues, as I mentioned earlier, has increased significantly, but the cash position has depleted along with it. So this indicates the fact that these guys are selling on credit. They are not selling on cash. So when the revenues are increasing, when the sales are increasing, everybody is happy. But the real problem is the fact that although they are selling their packaging material to clients, they are not in the habit of recovering cash due on time. That is why you see a cash depletion across the years 2022 to 2024, which had actually led to an overdraft or a cash deficit within the year 2024. So due to this cash deficit, they might have tried to decrease their inventory days, or they might have tried to convert their stocks into cash as fast as possible, given the fact that they have run out of cash in the year 2024. So that's exactly what I've highlighted here. Probably they are unable to purchase raw material stocks due to a lack of cash. So because of that, they are trying to get rid of their stocks as much as possible, thereby taking steps to reduce their inventory days. Okay, so by looking at inventory days, there's nothing really bad about Moody's performance. The only issue is with regards to the sudden decrease in inventory days. There's nothing wrong with a company trying to decrease its inventory days, because when you try to decrease inventory days, you will benefit from faster cash flows, which is good for a company. So there's nothing wrong with these guys trying to reduce inventory days, but we are yet to figure out why they took this decision to significantly decrease their inventory days. This could be mainly due to the fact that they had to rely on an overdraft, or they ran out of cash in the year 2024. Okay, because if they don't have cash, they cannot purchase raw material stocks. So in order to purchase raw material stocks, they need cash as fast as possible. So that's probably why they decreased their inventory days significantly in the year 2024. All right, then let's look at receivable days. So looking at receivable days, always think in terms of sales. So when you consider receivable days, always think about the sales position of the business as well as the cash position. So when you're evaluating, connect receivable days with sales and cash. So first things first, let's look at receivable days. These guys are supposed to recover cash due within 30 days as per their own internal control, but they have not adhered to it across the years 2022 and 2024. So that's the first point which I want to indicate. And then looking at the receivable days, it keeps increasing. It kept increasing between the years 2022 to 2024. So when the receivable days kept increasing, so did sales. So this gives us an indication that the company has taken steps to increase their sales. If you are to increase sales, you need to reach out to more and more customers. When you are trying to reach out to more and more customers to drive sales, you are supposed to provide discounts, or you are supposed to provide better payment terms, or offer longer credit terms or credit periods. So that is probably why when the sales had increased across the 3 years, the receivable days has increased as well, probably because these guys, with the intention of attracting new clients, might have offered longer payment terms. So that's why when they are expected to recover cash due within 30 days, they have not adhered to it across the 3 years. All right, and looking at the cash position, when you provide extended repayment terms, what happens is you run out of cash. That's exactly what you can see here. The cash has depleted. So although the sales had increased, although these guys have probably gotten in touch with additional customers, they have driven additional sales, they are not recovering cash due on time, which had led to a cash depletion and an extended receivable day. Okay, so this is how I have structured my answer. Receivable days has increased across the years, and it is higher than the industry average in the years 2023 and 2024. So the industry average is 39 days, which indicates the fact that players within this industry usually recover cash due within 39 days. So they have adhered to somewhat similar receivable days in the year 2022, but from the year 2023 onwards, they have gone beyond the industry average receivable days as well. And this indicates inefficient credit control. Why am I saying this? Because Moody's is expected to recover cash due within 30 days, but they have not stuck to this internal control across all 3 years. And you can see a high growth in revenues. I said that you are supposed to always consider receivable days or connect receivable days to the cash position of the company as well as the revenues. So there's an extremely huge growth in revenue, which indicates the fact that these guys might have extended credit terms to attract better or longer credit terms to attract new businesses. And since we are a new client, this might be beneficial for us. We can benefit from extended credit terms because when they're supposed to offer a credit term which goes on for a month or 30 days, when they end up actually offering something like 60 or 90 days, it is beneficial for us because we can wait without paying for 60 days or 90 days when these guys are expecting us to pay within 60 to 90 days. All right, so it's going to be beneficial for us. And looking at the payable days has increased across the 3 years, and they have never stuck to their internal control concerning payable days. They are supposed to repay their suppliers within 30 days, but they have not ever achieved it across the 3 years. And looking at the industry average, players within the industry usually repay its own suppliers within 45 days. So our performance, or Moody's performance rather, was quite all right in the year 2022, but from 2023 onwards, they have not repaid its own suppliers on time, which is not too good. And at the same time, you have to always connect payable days or consider or evaluate payable days with the cash position, because if a company runs out of cash, it will take an extended time period to repay its own suppliers. So that's probably why our cash position had depleted. That's probably why we have not our Moody's cash position has depleted. That's probably why Moody's had taken a longer period to repay its own suppliers. So payable days has increased across the years, which indicates the fact that these guys were unable to pay its suppliers on time. And this might be due to this company overtrading. So I'm going to explain what overtrading is in a little while. So I'm going to leave it at that. So since these guys appear to be overtrading, they might not have had the capability to repay its suppliers on time. That's why payable days had kept on increasing across the 3 years. And although this is the case, even when these guys had cash, they had a lot of cash in the year 2022. Even when they had cash, they have gone against their internal control concerning payable days. They were supposed to repay within 30 days, but they have taken 38 days on average in the year 2022. So that's exactly what I've highlighted in here. Moody's had been slow to pay relative to the industry average, even when it had cash. And this indicates the fact that Moody's is taking advantage of its suppliers. So, these guys, they are not sticking to their internal control. And at the same time, in the years 2023 and 2024, they have not adhered to the industry average as well. So it appears that this company is taking advantage of its suppliers. All right. So that's the first part of your question. First part was to explain the working capital position of Moody's based on reference material 4. Okay. So I've simplified it as explain Moody's working capital position. So I've done that. Then let's move on to the second part, risks of selecting Moody's. Okay, so let's try to figure out the type of risks we might face if we deal with Moody's. So I've come up with a separate subheading for this for the second part, which is in bold format. Moody's working capital position risks. The first risk is the fact that if we sign a contract with this company, thereby opting for a sole sourcing agreement, we will 100% rely on this company. And it is not too good to rely on a company which is involved with overtrading. So what is overtrading? Overtrading occurs when a company achieves a significant growth in revenue, That's exactly what you can see here. There's a significant growth in revenue. However, the cash is depleting. So when revenues are growing, the cash position is supposed to grow with it. But in this instance, the cash situation is depleting, which indicates the fact that although these guys are driving sales, they are not recovering cash due. So this indicates the fact that they are selling on credit rather than going for cash-based sales. So depleting cash and increasing receivables, as I mentioned earlier. So they are selling on credit. That's why their receivables are increasing. And on top of that, when they overtrade, since they run out of cash, they cannot repay their suppliers on time. That's why the payable days had increased as well. So that's exactly what you can see here. So whenever a company is trying to drive sales as much as possible, however, when it's not, when their cash position is depleting, they can't repay their suppliers on time. So because of that, payable days increases. And why is their cash position depleting? Because they are selling on credit with the intention of driving sales. So a company should not solely focus on driving sales, because when you try to do so, in order to attract customers, you will have to extend your credit period. You will have to offer discounts, and when you do so, it will impact your cash flows in a negative manner. And when your cash flows are impacted negatively, you cannot repay your suppliers. And when we are not paying suppliers on time, the suppliers will be dissatisfied. When this is the case, the suppliers will cease trading with Moody's in the future. So considering all these 4 points, it clearly indicates that Moody's is unable to finance and manage the rapid growth which it is experiencing. So when you think about a company's performance, you might have gone to meetings in your own office or in your own corporate environments. You might have heard your leaders talking in terms of profits and revenues. There's absolutely no point of talking in terms of or thinking in terms of profits and revenues if the cash position is depleting. The most important element of a business is the cash balance or the bank balance, because if you are managing affairs appropriately, then you will have positive cash flows and a positive bank balance. If not, a company will have to rely on overdraft facilities. And when we are relying on overdraft facilities, these overdraft facilities come with high interest rates. So it's as if we are running our business and actually sharing our profit with the finance providers. So in order to avoid such a situation, it's essential that any given company manages its cash position. So you should not, when looking at a performance of a company, you should not think in terms of revenues and profits. Instead, you should think in terms of cash. And if you look at this company's performance, it appears that they are thinking in terms of sales. That's why sales figures are growing. However, these guys don't have enough cash. So because of that, they are not repaying its suppliers on time. And because of that, the suppliers will be pissed. When this is the case, suppliers will cease supplying to these guys. When they run out of stocks, when Moody's run out of stocks, how can they fulfill our own Halfpenny's requirements? Okay, so these are the real issues which I've understood by looking at the numbers. And if they are overtrading, they will not be able to continue trading in the future. So it's extremely risky for us to opt for a sole sourcing agreement with this type of a company, because they are facing financial issues at the moment. They are reliant on an overdraft facility, and if these problems keep continuing into the future, then one fine day, their suppliers, Moody's suppliers, will cease supplying to them. And if they run out of supplies, then Moody's is not in a position to supply packaging material to us. And when we opt for a sole sourcing agreement, we will be stranded. So it's not too good to deal with this type of a company. And also, there's a risk of this company not being able to fulfill Halfpenny's packaging material needs due to low inventories, because they have taken steps to significantly reduce inventories given the fact that they are running out of cash. So this is not too good for us because we are into manufacturing in bulk. When we are manufacturing in bulk, we are supposed to purchase packaging material in bulk as well. So if this company, Moody's, is not in a position to fulfill our requirements. They might be in a position to fulfill our requirements right now, but in the future, if they run out of stocks, raw material stocks, then we are left stranded. So it's not too good to deal with this company. And also, with regards to ethics, Moody's appears to be exploiting its suppliers because looking at the industry average payable days versus the payable days in the years 2023 and 2024, they have not adhered to this industry average. They have taken longer time periods to repay its suppliers. And at the same time, even when it had cash, they have not stuck to their internal control concerning payable days. So this indicates the fact that it might be this company might be exploiting its suppliers. If so, it's unethical. And when dealing with an unethical party, it will impact our own reputation in a negative manner if our shareholders or major stakeholders get to know of the fact that we are dealing with an unethical supplier. All right. So these are the risks at our disposal if we go ahead with this arrangement. So after you have developed this type of an answer plan, your next step is to expand the answer plan in paragraph form. So that's exactly what you can see within our suggested answers. So it's the same information. It's simply a matter of expanding these points which I've included in paragraph form, because your examiner expects your final answer to look something like this. Don't include the answer plan. You should not have both the answer plan as well as the extended answer. Instead, your final answer should look something like this. This answer plan should be developed when it comes to planning. As per our answering technique, in the first 5 minutes, you are supposed to read through the scenario. Then you are supposed to dedicate 20 minutes of your time to develop the answer plan. Once you have developed the answer plan, focused on all subtasks which appear within a section, then the remaining 20 minutes should be dedicated towards expanding the answer plan in paragraph form. So your final answer should look something like this. Okay, I hope you gain a good understanding of how to tackle a question to do with working capital management. And talking about our pass rate, we achieved a 95% pass rate in the previous sitting. And our highest scorer, Jonathan, achieved 109 marks when the pass mark was just 80. So, you can achieve a similar feat if you stick to our study process religiously. So I hope if you are sticking to our original study plan, I hope you'd keep on, practicing it until your exam. And if you're sticking to the 3-week study plan, I hope you'd attempt the relevant mock exams within this week. And if you're yet to start preparations, you still have time. If you start right now, you need to attempt 3 mock exams within this week and conduct revision focused on the same 3 mock exams. All right. So having said that, I'm moving to the Q&A. So if you have any questions or concerns, you can switch on your mic and talk, or drop a message via the chat. I'm going to pause the recording. Resume the recording. All right, folks. So thank you very much for those questions. I hope I addressed everything. So if you want to contact us, you can do it via our website, which is www.study@tcs.com. Visit our website and click on the contact button and drop your message. Our admin staff will get in touch with you via email during office hours, or you can email us directly via info@study@tcs.com or WhatsApp on this number. So I also invite you to follow us on our social media handles, especially YouTube and TikTok, because the recorded versions of these webinars and workshops are uploaded to our YouTube handle. And via TikTok, you'd gain access to 6 videos, which is a good pre-seen mind map. So keep watching these 6 videos over and over until the day of your exam to constantly keep yourself reminded of the most important points highlighted within your pre-seen document. And also, please do read the blog post which we have developed focused on Halfpenny, so that you gain a good understanding of the nitty-gritties of your chosen company and its industry. Having said that, it brings us to the end of the second workshop conducted in lieu of the upcoming examinations. I hope you gain something out of this session, and I invite you to join the third workshop as well, which is focused on your E1 syllabus, which is happening next Sunday at 10 a.m. UK or 9 GMT. And I hope you'd keep fighting in these final 2 weeks. if you are yet to start preparations, we are offering a £150 discount on the value course. Go invest and start your preparations, because you still have time. It's simply a matter of attempting the mock exams, going through the answer plans, and redeveloping answer plans. So you can easily do all these things within simply 2 weeks. So keep fighting, keep moving forward. And if you have any questions or concerns, always make sure to DM me or drop a message on the OCS WhatsApp group. I'm always there to help you out. So see you guys next week. Thank you for joining.